Hello and welcome. You tune into Market Cafe with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next 1 hour, we'll take you through how the global markets panned out and what are the cues that you need to watch out for in today's trading session. But before we begin the show, Kanishka, let me come to you and get a sense of how the global markets have moved, especially the Wall Street. They are sitting at a life high, especially S&P 500 that's giving solid moves. But take us through the fine print of how the Wall Street moved.
That's right, Ankita. Very good morning to you, first of all. Now, like you said, it was a slightly mixed day on Wall Street. The S&P 500, that narrowly posted another fresh record close yesterday as traders weighed the latest earnings reports and new trade developments. Now, the broad market index that ticked up about 0.06% to end at 6,309 and notched its 11th record close in 2025. Now, the 30-stock Dow Jones Industrial Average, that rose about 0.5%. And by contrast, the Nasdaq Composite, which had been seeing record closes as well, this one slipped about 0.4% today, bogged down by declines in tech stocks. Now, this was the first negative day for the tech-heavy index in 7 sessions. Now, chip stocks were under pressure as downbeat sentiment in the space was fueled by a report by the Wall Street Journal that SoftBank and OpenAI's $500 billion AI project has faced some difficulties in getting underway and scaled down its near-term plans. Broadcom lost more than 3%, and AI darling, that is Nvidia, that shed more than 2% as well. Meanwhile, shares of aerospace and defense names, they were also in focus. For instance, Lockheed Martin, the shares were down about 11% after the company's revenue for the second quarter missed analyst estimates. Similarly, Philip Morris, that also lost about 8% after the tobacco company's second quarter revenue fell short of estimates. However, those were the declines that were offset by gains in the broader market outside of tech as well. Now, investors flocked to healthcare sector in particular, which outperformed with a rise of nearly 2%. On the day. Now, this comes as 90 S&P 500 companies have already reported their earnings, with almost 85% of them topping analyst estimates. All eyes are now on commentary from the companies about the macroeconomic certainty, the impact of tariffs, and the details on demand related to AI as well. Now, Google parent, that is Alphabet and Tesla, they will report their earnings today. Alphabet and Tesla, they're expected to report their earnings today, and they'll kick off the highly anticipated results from the Magnificent Seven companies. So these are the results that we are going to track, and on the back of these earnings, it remains to be seen whether or not the market is going to see another run from here. But of course, the focus now shifts to the development as Trump says he's completed a massive deal with Japan, and Japan will reportedly invest $550 billion into US, which will receive 90% of the profits and will pay 15% tariffs, as he says. So that's how the market, US market is looking like. But how are things looking on the crude front, Ankita?
Yes, Kanishka, so that's how the US market really panned out, and it's all about the tariffs. And breaking in the morning is the fact that the 15% tariff that the US has imposed on Japan, and that the fact that Japan will be making a big investment in the US, and US will be getting 90% profits from that investment, and in return they've slapped a 15% tariff on Japan. So that's the big news coming in on as of tariff is concerned. But let's talk about the oil prices. Now, oil prices have declined for a third consecutive session on concerns of a brewing trade war between major crude consumers and the United States and the European Union that will curb fuel demand growth by reducing economic activity. Now, Brent crude has fallen almost 62 cents or 0.9% to close at $68.59 a barrel. The US, the WTI crude lost almost 99% or 1.47% to settle in at $66.21 a barrel. Now, the August WTI contract that expires on Tuesday, and the more active September contract was down 47 cents or 0.7% to $65.48 a barrel. So that's how the crude is panning out. Oil prices declining for third consecutive session, Kanishka.
Right. So now shifting focus from the US markets and commodity markets to our markets back home. Now, it was a listless day of trade on D Street yesterday. Benchmark indices gave up all the early gains to end in the red. Nifty ended flat with a negative bias at the 25,060 levels. This was led by a fall in PSU banking names. Now, all sectoral indices, they too ended in the red. Now, let's get Snehi to get us all the reaction from yesterday's trading session.
Well, yes, the sluggish trading session is what we've seen yesterday. We've managed to hold on to the 25,000 mark, but nonetheless, we've ended in the red across the board for Nifty, Sensex as well as Nifty Bank. For the Nifty, we've ended at 25,060 to be precise, a 0.1% cut coming in. Sensex only a slight negative bias is what we've seen, but it's actually been Nifty Bank that gave away all of its day's gains, and in fact on the other side it took a steep knock of about 0.3% as well on the Nifty Bank. Some top gainers yesterday, of course, the stock of the day was Eternal. Very good moves coming in. That stock closed with gains of about 10.5%, followed by HDFC Life, Hindalco, Titan and BEL. What created pressure on the Nifty yesterday was Shriram Finance, Eicher Motors, Tata Motors as well as Adani Ports. All of these stocks were tanking 2 or more than 2% in yesterday's trading session. From the broader end of the market, the advanced decline ratio was in the favor of the declines. What was very interesting to note yesterday is that the India VIX is now below those 11 levels. 10.5, 10.7 thereabouts is where the India VIX has closed for yesterday. So that's also going to be a very important metric to watch out for in terms of the volatility that we can expect to see in the market, given the way the market construct is. Sectorally, Nifty Media, PSU Banks Realty. So your PSU Banks Realty as well as Pharma, they were the three big losers yesterday. All sectors ended in the red, but these were the ones that took steeper knocks, whereas energy, metal, banks, FMCG, IT have taken considerably lesser cuts in trade compared to these three big sectors. PSU banks, you had Canara Bank, PNB, PSB, Bank of Baroda, IOB that were struggling to hold on to the red to the green in trade, and they were tanking away yesterday. When we spoke to a technical expert, Mr. Akshay Bhagwat, on closing trades yesterday, he still sees some optimism for the Nifty and believes that the open today could be flat to slightly positive and sees 25,300 as the expiry target for the Nifty for this week's expiry. So watch out for these levels and watch out for how the market pans out today.
All right, so these are the cues to watch out for before the trading session. But let's go across to my colleague Sharad, who's standing by to tell us what's the FNO setting looking like for today's trading session. Sharad, take us through the details.
Well, over the last two trading sessions, Nifty and Nifty Bank both are stuck in a narrow range, and of course volatility coming both the days. Today itself, the markets are India wakes at a very lower levels, going below 11, and also looking at the PCR numbers, they are both comfortable when it comes to Nifty and Nifty Bank. Interestingly, Nifty, there's a short build-up happening, and a change in open interest is just a minor 1%, and the most active strike price for Nifty weekly expiry 25,100, where call writing is maximum, while the same number put writing is also seen. Highest open interest open strike for the Nifty weekly expiry put is coming in at 25,000, call is coming at 25,100 levels. Nifty Bank, long unwinding happening. There is a divergence coming in between Nifty Bank and Nifty, change in open interest, however, going down by almost 1.2%. Highest open interest strike price, that is coming in at put at 56,000, call at 57,000. Now, FI long positioning trade, that is keeping on coming down. Yesterday that was 15% and now it's at 14.4%. So that is small reason to cheer when it comes to the FI positioning. DI long positioning, that has remained stable at roughly 69%, and even the retail long position, that has also remained 65%. Of course, the volumes itself, that is something to watch out for in the markets. And in the FNO band, RBL Bank, Bandhan Bank, which are already there, and now India Energy Exchange also comes in.
All right, so that's how the F&O snapshot is looking like today. But Sharad, stay on with us, and let's also discuss all the stocks that are likely to buzz in today's trade on the back of news flow. And for that, we are also joined by Varun and Ravinder from our research team. Varun, let's start with you. Which are the stocks on your list today?
So let me start with Dixon Technologies, because the company has posted its results and the results are very strong, and they have been led by the overall mobile business. The overall revenues, they have gone up by around 88.2% to around 12,386 crores, and the profitability of the company has gone up by around 68% to 225 crores. Also, the company says that the overall outlook for the company is very strong, and especially with the JVs in line, the overall outlook for the company is very strong. Paytm, the highlight of the quarter was that the company has actually reported a profit of around 123 crores, and this is the first time that the company has reported a profit. Also, the EBITDA, the absolute EBITDA for the company has gone up drastically. The EBITDA this quarter has been around 72 crores, and the EBITDA margin has been around 4%. And the company says that the EBITDA growth will continue in the near future also, and the overall EBITDA margins will actually increase till the end of this quarter. Also, if you look at the GMV, that has gone up by around 27% on a YOY basis, and that is better than what we were expecting. Overall, the revenues have also gone up by around 28%, which is better than what we were expecting. So it's a good quarter for Paytm. United Breweries, it's been a good quarter for United Breweries as well, because the overall volume growth for the company has been around 11%, which is at 11 quarters high. We are expecting the volume growth to be around 7%, and the overall volume growth has been better than what we were expecting. Also, the company has gained market share. The net revenues are also up by around 15.8%. The profitability of the company has gone up by around 5.9% to 184 crores. So, United Breweries has also posted a good set of number with the volume growth hitting 11 quarters high.
Dixon Tech, Paytm, United Breweries, all of these are in focus today. But apart from these counters, Sharad, let me come to you and get a sense of what have you picked out for us? What are the stocks to watch out for in today's trading session?
In focus is JSW Infra, largely inline set of numbers coming in, but the project expansions underway, and that's a strong commentary coming from the management also. And the balance sheet, brokerages expect that the balance sheet will remain same. The revenue jumped almost 21% on a year-on-year basis. The net profit also jumped 32%. Dalmia Bharat, the EBITDA per ton, that has hit its 4-year high levels, coming at roughly 1261 rupees, indicating almost a 37% jump on a sequential basis. Now, of course, this is coming in on the back of improved realization and sustained cost control seen, and we might see cement stocks buzzing in today's trade as well as yesterday. Largely, there was a strong buying coming in all the counters of the cement space. Zensa Tech, the numbers largely it's neutral impact. Broad-based growth has been seen except the manufacturing segment. The management is expecting in the con call that stated that FY26 should be better than FY25. Looking at the headline numbers, revenue was up almost 2% sequentially. However, EBIT margin did see a downtick of roughly 35 basis points. But all in all, largely inline set of numbers coming from Zensa Tech.
All right, so JSW Infra, Dalmia Bharat and Zensa Tech, some of the earnings counters that we will be watching out for in today's trade. But Ravinder, now coming to you, which are the stocks on your list?
Well, as a broking stock can be in focus, like broking stocks like Motilal Oswal and Angel One can be in focus in today's trading session, where NSE has issued a detailed operational guidelines for retail algo trading on more compliances and costs. So back of this broking stock can be in focus. Apart from this, textile, liquor and JLR Tata Motors can be in focus in today's trading session, where UK and India FTA likely to be signed on July 24, and this agreement seeks to double bilateral trade of $120 billion by 2030 by eliminating or significantly reducing custom duties on a wider range of product, and Indian exporters such as textile, footwear, gems and jewelries, furniture, auto components, chemical, machinery, sports goods and other items likely to have a zero duties, while the UK will see tariff reductions on luxury items such as scotch, whiskey and premium cars. So back of this, keep an eye on liquor, textile and JLR stocks. Apart from this, Infosys can be in focus in today's trading session, where company has collaborated with AGCO to deliver IT and HR operation transformation and building on a long-standing relationship to enhance AGCO operational framework for growth by leveraging Infosys Cobalt and Infosys Tobas. And lastly, realty stock Oberoi Realty can be in focus, where management in the con call has said that the company is witnessing a strong leasing traction across all three office assets and the newly launched Sky City Mall. And in FY26, management expect to launch one more tower in Borivali and two in Thane, Pedda Road and Gurugram. And lastly, they said that they may also launch products such as Adarsh Nagar, Worli and Tardev in the year. So back of this, Oberoi Realty can be in focus.
All right, so these were the counters that you keep on your radar in today's trading session, and they will be in focus on the back of those news flows. Thank you so much, Varun, Sharad and Rabinder, for joining us today with all the stocks in focus. But let's get on board our market guest, Steve Eglander, from Standard Chartered Bank Global Head. He's joining us now to weigh in on the global markets and how the markets have panned out and the news flow that is shaping the markets world over. Hi, thank you so much. Good morning to you, Steve, and thank you so much for joining us.
Good morning. It's a pleasure.
Steve, first up, the biggest news for morning today is the news coming in on, of course, tariff. There is finally some news that's come out with Japan. They have struck a deal. It's the way the market is reacting, especially the Nikkei has jumped up. It seems like investors had gotten way too pessimistic, and the fact that the deal has come out, it's a win-win for US because they are getting an investment of $550 billion. They'll get 90% of the profits, and from what we hear, Trump is really expecting planned investments from players like SoftBank, OpenAI, Oracle, and so it's a win-win for US. But what does it mean for Japan and also the other emerging markets for the deals to come?
Well, I think in the short term, it removes some of the risk premium that was weighing on Japanese asset markets. So we've seen the Nikkei take a big jump, and even Japanese bond yields have gone up. In this case, not because of inflation or activity concerns, but kind of dragged up by equities. So I think that the markets seem to be relieved that the worst hasn't hit. It also seems that the auto sector got itself like 15% tariffs, which I think is a bit better than many were expecting. I'd say that some of the other stuff is a little bit soft. I mean, promises to invest, direct investment, sometimes they come to fruition, sometimes they don't. They always take a while. But I think that's going to set a pattern for other major economies to try and bargain down some of the reciprocal tariffs in return for direct investment. And that seems to be acceptable to the US.
All right. Hi, Steve. This is Kanishka also joining in. So that's the first thought on tariffs that are imposed on that are to be imposed on Japan. But any particular segments where you feel the impact is going to be felt more than the others?
Well, in Japan, there's always a focus on autos and steel, and there are some headlines that suggest that steel and aluminum aren't going to get the break that autos are. So we'll have to see if those headlines are true or not. There's also discussion of opening up of Japanese auto and some agricultural markets. We'll have to see how much of that actually occurs as well. But I would say that one implication is that it puts pressure on other countries, Japan's competitors for U.S. markets, to come to similar deals with the U.S. because now that Japan is kind of in the clear, they don't want to run the risk that they get hit with harsher tariffs if no deals arrive.
Right, that's absolutely what we meant to ask, whether it will have implications on other competitors and other markets to strike a deal. Could there be higher tariffs for other countries should they refuse to strike a deal like Japan? But that's a wait and watch since the tariff news keeps flowing in. But Steve, on that note, thank you so much for taking the time out and joining us today and weighing in on how the tariffs are really panning out. But let's move over then and come back home. Let's go to Snehi. She's standing by with all the cues that we need to watch out for before today's trading session. Let's go across and take a look.
Well, yes, lots of cues to watch out for in terms of macroeconomic action back home. Not much is expected, but from Eurozone, you have the consumer confidence numbers coming out. In terms of global earnings, all eyes are going to be on heavyweights Alphabet, Tesla, IBM and SAP that are going to be coming out with their Q2 numbers on Wall Street. But shifting focus back home, 3 Nifty heavyweights will be coming out with their numbers, the likes of Infosys, Dr. Reddy's Labs and Tata Consumer. And from the broader end of the market, also a whole host of companies like Persistent Systems, Mahindra Holidays, Syngene, AB Real Estate, Mars Financial, Coforge, Thyrocare, OFSS, SRF and a whole host of companies will be coming out with their numbers, so watch out for all of these stocks. In terms of annual general meetings, so keep a close eye on Syngene International, Bajaj Housing Finance as well as Mahindra Holidays. In terms of corporate action and board meetings, also lots to watch out for. Mahindra Logistics will be trading X rights in the ratio 3:8. Aditya Birla Real Estate and SRF board along with their earnings are also going to be mulling fundraising, so watch out for that. IndusInd Bank board is going to consider and approve proposals related to issuing long-term bonds or debt securities on a private placement basis. So IndusInd Bank will also once again be in focus, and it will be the last day to buy the shares of Cholamandalam Investment, CG Consumer, and Hero Motor to be eligible for their dividend record date if you wish to do so. In terms of other events, winning the AI race event is going to be taking place in the US, and Donald Trump is expected to speak. PM Modi will be visiting UK and Maldives from the 23rd to 26th of July, and we understand from reports that the next round of Russia-Ukraine peace talks will also be taking place. So watch out for all of these cues, all of them very important to track.
All right, thank you so much, Snehi, for taking us through all the cues that we should be watching out for in today's trading session, especially Infosys, Dr. Reddy's and Tata Consumers that are going to report their earnings later in the day. But on that note, we'll take a very short break. We'll be right back with more updates on the other side. Empowering tax officials to access forcibly, if necessary, the social media and private emails of people they are conducting search and seizure operations on. Now, my colleague Sumita Karir is now joining us with more details.
That's right. In its report tabled in the Parliament, in fact, the Parliamentary Select Committee has retained various provisions of the income tax bill, which were criticised earlier when the bill was first tabled in the Parliament. In fact, reportedly, the bill retains some very controversial procedures and processes and provisions that reportedly grants tax authorities the power to access, even if by force, if needed, to access the social media and private emails of individuals under investigation when search and seizure procedures are going on. In fact, the government aims at streamlining and, of course, rationalizing the existing Income Tax Act along with many of its amendments that have been made through the years. And this particular provision with respect to search operations and accessing the emails, that has gotten a wide variety of criticism from several quarters. In fact, what we are given to understand as per the provisions of the bill, any concerned person is bound to give reasonable, technical and other assistance as may be necessary to the designated income tax officer to check any information, electronic records and communication or data that's been contained on such computer systems. And of course, there are privacy concerns that are rising and that are, of course, being talked about. The fact that, they will, this access, the right to access will override the access code to any said computer system or virtual digital space.
All right, moving on, and then Union Sports Minister Mansukh Mandavia is set to introduce the National Sports Governance Bill 2025 in the Lok Sabha today. Well, the bill focuses on athlete welfare and systemic reforms. And after 62 years of service, the Indian Air Force will bid farewell to the iconic MiG-21 fighter jet. A ceremonial send-off is scheduled for September 19th at the Chandigarh Air Base. Okay.
Due to continuous heavy rainfall, all gates of the Salal Dam in Riyasi district have been opened to release excess water and manage the rising Chenab River levels. Next up, let's shift focus to some global stories. Donald Trump has unveiled what he's calling the largest deal ever with Japan. Now, the US imposed 15% tariffs on Japanese imports, and the president is claiming that the US will gain 90% of the profit. Now, as part of the agreement, Japan is set to invest $550 billion into the US and open up its markets to American cars, trucks and farm goods. Now, Trump says the deal will create hundreds and thousands of jobs. The announcement comes just days after Japan's ruling coalition lost its majority, putting the added political pressure on PM Ishiba as he reassesses his leadership and the fragile trade balance. Let's go across and listen to what Trump had to say about the new tariff deal.
The largest trade deal in history, I think maybe the largest deal in history with Japan. And that was done with Japan. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. But we're doing really well as a country. We're strong. We have a lot of money flowing in. The tariffs are kicked in better than anybody other than me and a few of the people in the room thought could happen, Howard and Scott. And I just want to thank you. You've been unbelievable allies, because you're really allies. That's what you've been, and we appreciate it. Some were very difficult, but you got there. And some were a little bit, they had a little confidence, and they came in early, and we just appreciate everybody.
Also, let's bring in board my colleague Sumita Karir for more on what this deal means for the two nations and if we could see similar deals with India as well. Sumita, tell us, what are you picking up?
In fact, Ankita, that remains to be seen whether a deal with India is imminent, even though Donald Trump, at least in the past 2 weeks, has stated that a deal with India is coming soon. What we're given to understand on the side of negotiations with respect to the India-US deal is the fact that negotiations are still going on with respect to a mini deal or an interim trade deal. However, in the second half of August, a team from the United States will be visiting India to negotiate on the first tranche of the bilateral trade agreement. So that's happening as of now with respect to the India-US deal. But coming back to the point that you made about the Japanese deal, well, Donald Trump, like you rightly stated, he stated that it's a massive deal with Japan that the United States has signed, perhaps the largest deal ever. In fact, as part of this deal, U.S. importers will be paying 15% reciprocal tariffs on Japanese goods, and then Japan will also be investing $550 billion into the United States. Now, that becomes significant because Donald Trump has been stating that he wants to, make America great again, and manufacturing is going to be a key part of that policy. So this is his attempt at getting nations via deals to start manufacturing in the United States. In fact, he also stated that the deal is going to create thousands of jobs. And responding to this announcement by Donald Trump, Japan's Prime Minister Shigeru Ishiba said that the government will examine the details of the deal, and they will then be holding a phone call and in meeting with the American president.
All right. Thank you so much, Sumita, for taking us through the details of the US-Japan deal and also telling us the latest on what can we expect from the India and US deal. But moving on to some more global stories then. Now, the White House has unveiled a new trade framework with Indonesia, where Jakarta will scrap most tariffs or US goods. On US goods. Now, in return, Indonesian exports to the US will face a 19% tariff, which is down from the earlier proposed 32%. Final negotiations are still underway, but the deal is also including big-ticket commercial wins, a $3.2 billion aircraft purchase, and $15 billion in U.S. energy buys. Both nations will work to address non-tariff barriers and formalize the agreement soon. Next up, the U.S. is likely to extend its trade deadline with China, says Treasury Secretary Scott Bessent, as both sides eye deeper negotiations. Bessent will meet Chinese officials in Stockholm next week to discuss not just trade but Beijing's purchases of sanctioned Russian and Iranian oil. Now, this comes after months of de-escalation. Traders are hoping for more constructive talks between the world's two top economies.
And well, top economist Mohammad Al-Arian has broken ranks with Wall Street, urging Fed Chair Jerome Powell to resign to protect the central bank's independence. In a sharp post on X, Al-Arian said Powell's exit would be better than allowing growing threats to erode Fed's autonomy. Scott Bessent recently slammed the Fed for mission creep, while Trump has intensified criticism over Powell's decision to hold rates steady. And tariffs just took a $1.1 billion bite out of General Motors' second quarter earnings, sending shares down 8%. The automaker warned the full-year tariff toll could hit $5 billion, but it is racing to blunt 30% of the damage. Despite the hit, GM beat profit estimates thanks to the strong truck and SUV sales, even as the revenue slipped 2%. With EV demand cooling and tax credits drying up, GM is now doubling down on gas-powered vehicles. And the godfather of heavy metal, Ozzy Osbourne, who was the legendary frontman of Black Sabbath, has died at 76. The Prince of Darkness shot to fame in the 1970s with hits like Paranoid and War Pigs, and infamously bit the head off a bat on stage. Osbourne sold over 100 million records across a wild genre-defining career. A working-class kid from Birmingham turned global icon, Ozzy lived loud, burned bright, and rewrote the rules of rock. His family said he passed peacefully.
On that note, we'll take a very short break on this edition of Market Cafe. We'll be right back with more stories on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. It was when
Sumita Kareer is now here to talk us through the agenda.
That's right. The Prime Minister is embarking today on a two-nation visit. The Prime Minister will be in the United Kingdom and Maldives, so trade a deal. And of course, a Maldivian reset is going to be on the agenda. The visit of the Prime Minister to the United Kingdom, well, the Prime Minister is expected to depart at 1 p.m. from India, and he's going there at the invitation of UK PM Keir Starmer. In fact, as far as the visit is concerned, it's stretching from 23rd till the 24th of July. And of course, the signing of the UK-India FTA, according to what sources are suggesting, that's going to be a key highlight. This is the Prime Minister's fourth visit to the UK, and he's expected to also have a bilateral meeting with King Charles III. But coming back to the India-UK FTA, as far as that is concerned, well, it got concluded in May this year. And of course, as of now, as Foreign Secretary Vikram Misri stated yesterday in a briefing, that the legal scrubbing is going on. India and the United Kingdom are continuing to work on those, and last-minute work on the deal is going on. Remember, as part of that trade deal, India and the United Kingdom are aiming to double trade by 2030. It will increase bilateral trade, remove trade barriers, and will allow for duty-free entry of goods. In fact, this trade pact will be in effect after an approval by the British Parliament and, of course, India's cabinet. But overall, there's been an elimination of tariffs on both sides of over 90%. But speaking about the second leg of his visit, that's going to be happening to Maldives from 25th till the 26th of July. This is going to be the Prime Minister's third visit to Maldives. He is going to be the guest of honor for their Independence Day celebrations. And of course, a Maldivian reset is going to be on the agenda as far as ties are concerned. So talks on trade, on definitely on UPI and digital payment and tourism, they are going to take center stage.
All right, moving on to the earnings corner then. It was a stellar quarter for Paytm for the quarter gone by. The fintech major reported its first operationally driven profit since the listing, aided by strong growth in lending and drop in its expenses. Paytm also announced changes in its board of directors. The group CFO Madhur Deora to retire as executive director at the next annual general meeting. My colleague Varun is joining us with the fine print of the earnings. Varun, take it away.
Definitely. So it has been a good quarter for Paytm, and the biggest highlight was that the company is in profit. The company has delivered 123 crores of profit this quarter. And also, if you look, the EBITDA for the company, it's not EBITDA before ESOPs, it's a plain EBITDA. That's for the company, it has come at around 72 crores. And the margin for the company has been around 4%. And even the company has said that the company would continue to the overall EBITDA growth, and the margins will increase from year on till the end of FY26. If you look at other parameters of the company, even the revenues, they are up by around 28%. We were expecting it to come at around 1900 crores. They are up by around 28% to 1918 crores. Even the GMV for the company, that has grown up by around 27%. We were expecting it to grow up by around 23.3%. Also, the contribution profit for the company, that has shown a good growth of around 52%, and the contribution margin for the company has come at around 60%. Now, if you look, the company has done less of DLG this quarter, and that's the reason you look, the overall operating performance of the company has improved because the overall cost of the company has gone down, and that's the reason the overall contribution margins of the company stood at around 60%, and also that has resulted into a better profitability for the company. The net payment revenue were up by around 38%, and also the distribution of financial service revenue, that has increased by around 100% in this quarter to around 561 crores. So it has been a good quarter for the company, and finally the company is in profit, around 123 crores of profit. That is what the company has done this quarter, and the company is confident of achieving good growth in EBITDA going ahead as well.
Paytm is finally in profits now. Thank you, Varun, for taking us through the fine print for Q1 numbers for Paytm. But let's also take a look at what the management had to say about the company's performance and the way forward, especially when it comes to recovery in personal loans.
It is not the agenda. It is rather investing in a few more line items that we believe are long-term growth. So we are not actively pursuing cost cuts, while I'm definitely pursuing whatever is not necessarily drop it out of the window. Where we are, obviously, if you read the earning release, we have pruned out every word which included EBITDA before ESOP, PAT before ESOP, or anything before ESOP. Next quarter onward, we will stop giving the ESOP line, and it will be only the employee cost, so that we are maturing towards absolute complete employee cost, including EBITDA or PAT, where the ESOP cost is the cost to the management. So there we go. No more adjusted anything.
And while keeping with the earnings, then IT giant Infosys is all set to release its Q1 numbers, while the street is expecting pressure on profitability. What else is really on the radar? Let's go across to my colleague Pulkit, who's standing by with what to pencil in for Infosys.
After TCS, Wipro, HCL Tech and Tech Mahindra, now it's time for Infosys. So if we talk about the expectations from Q1 result, in the USD terms, the revenue could be up around 3%. In INR terms, we are expecting around 2.3% upward movement in revenue. If we talk about EBIT, we are expecting somewhere around 3% up. If we talk about EBIT margin, we are expecting it to be flat, around 21%. And if we talk about profit after tax, we are expecting to go down by around 3.5%. If we talk about the management commentary expectation, we are expecting the deals to be stable, around $2.5 billion. We are also expecting a weak discretionary spending in manufacturing and retail segment clients. We are also expecting the guidance to be maintained, that was around 2 to 5% in the growth, and for the margin part it was around 20 to 22%. Company had given this guidance in the last quarter, so we are expecting that company will maintain this. The key monitorables that will be to watch out for: US business and the BFSI segment business, how it is performing for the company, the deal pipeline and the Gen AI impact on the business, any changes in the FY26 guidance that company had given in the last quarter, what is the outlook on the discretionary spending from the clients, and the most important thing and the last, that is headcount and attrition trend, how it will perform. Once the result will be out, we will update you.
All right, so that's what we expect from Infosys earnings due later today. But now shifting focus to another earnings counter. It was a stellar Q1 for Dixon Tech as well. The revenue, EBITDA nearly doubled, while the profits jump around 70%. Srishti joins us now with all the number crunching and what brokerages are making of the results.
Well, yes, yet again a stellar set by Dixon Tech this time around, wherein a beat on across all the parameters we have seen, and especially the margins being steady at 3.8% in this particular quarter on a YOY basis. There hasn't been any jump on the margins, but the revenue, that has seen a jump of 95% on a YOY basis. EBITDA shot up by 94%, while the profit now stands at 225 crores. That number is actually in line to what we were expecting. Now, in terms of the internals, it was the mobile segment that has done very well. Mobile and EPS segment has surged 125% on a YOY basis, while the consumer electronics segment performance was driven by sharp ramp up in refrigerators, and the LED TV remained weak. But the management is quite optimistic in the growth going ahead, specifically for their mobile volume guidance that stands at 42 to 43 million for FY26, and even higher numbers for FY27 as well. They're very much bullish on the export markets as well, and along with that, they expect the margins to expand going FY28 as well across, not just for the mobile segment, which is going through a lot of this backward integration, but in the other segments as well. Brokerages are also finding the results very positive, because Nuvama today has actually held their hold rating on this particular counter at 16,100 rupees is what their target is. The medium-term margin expansion target of 130 to 150 basis point remains intact, while Motilal Oswal continues to maintain its buy, but have raised the target price to 22,100 versus 20,500 earlier. The recent times reinforced the strategy of backward integration, and they have raised their FY27 earnings estimate by 10% to factor in the higher mobile volumes as well. So that's about Dixon Tech Q1 earnings review.
Absolutely, Dixon Tech posting good set of results, and bullish brokerage notes that are hiking the target price, and it's a wait and watch as to how the stock reacts in today's trading session. But on that note, we're completely timed out in this edition of Market Cafe. Kanishka and I will take your leave, but don't go anywhere because there's lots more action coming up only on ET Now. Stay tuned.
When the stakes are high